Thank you for taking the time to tune into this podcast. My name is Ayanda Zondi and I'm a Senior Client Investment Specialist. I'll be taking you through this presentation. This podcast focuses on the AF Protector portfolio. AF Protector is a multi-asset class portfolio that's designed to maximize the likelihood of meeting each of its investment objectives. The portfolio's three main objectives are to achieve adequate income replacement at retirement, to protect savings from capital loss over a 2-year period, and to grow that capital in the portfolio. We do this by deploying multiple complementary investment strategies and spreading risk across different investment types, sectors, and regions. We believe that this approach offers a compelling value add to our portfolio construction, so the portfolio is able to achieve its investment objectives and deliver risk-adjusted returns over the long term. The Protector portfolio represents Alexforbes' best view default pre-retirement portfolio and is used as the de-risking portfolio during the income securing phase of the retirement journey. The three main objectives of the portfolio are paired with strategies that have an inherent dual role. Firstly, to achieve purposeful diversification, and secondly, to maintain balance in the portfolio so that no single strategy or asset class and its performance ever dominates the fortunes of the portfolio. The portfolio has a composite benchmark noted on the right-hand side. The various asset classes used in the portfolio include allocations to nominal bonds, inflation-linked bonds, property, local equity, and hedge funds. The fund also has a 15% allocation to global assets. In line with our multi-manager philosophy, we've selected the best-of-breed managers per asset class to manage each of the individual building blocks. We blend managers who are uncorrelated to each other and capture various risk premia available in the market. The portfolio has outperformed its benchmark over all longer-term measurement periods and ended the quarter ahead of the benchmark, returning negative 0.48% in what was a very difficult quarter for global markets, with rising inflation, surging oil prices, lockdowns in China, and US policy normalization, as well as the Russian invasion of Ukraine. AF Protector is defensive in its construct with the aim to provide stability of retirement income and capital preservation as a member nears retirement. The portfolio was also ahead of inflation over all measurement periods. The portfolio has delivered on its primary objective of income replacement, as portfolio returns match annuity prices in the market, adjusted for inflation, thanks to the positive impact of diversification. The portfolio has benefited from rising markets over the past 2 years, and the returns are well in excess of inflation, as the asset class returns have been strong. The pure equity local building block delivered positive returns over the quarter and the year, and the performance of value managers contributed strongly in a cycle that has favored the value style. Over the quarter, managers who were overweight mining and financial shares outperformed the benchmark. The best performing managers were 361, 91, and MNG. These managers held significant exposure in resources and their stock selection was positive, being overweight Sasol, Glencore, MTN, and APSA benefited, while underweights to Tiger Brands and BTI added to relative performance. Inflation-linked bonds also contributed positively to performance and were ahead of the benchmark for the quarter. Inflation linkers are expected to protect against the rise in inflation. Inflation expectations have been revised upwards globally, influenced mainly by a surge in oil prices and supply chain constraints. Pure fixed interest local ended the quarter stronger when compared to cash and inflation linkers, supported by strong bond yields and a stronger rand. Bond yields remain attractive at around 8.5%. The attractive yields support income generation for the portfolio. The exposure to domestic hedge funds contributed to positive absolute performance in a volatile market environment and helped to deliver protection. The environment was conducive for active hedge strategies, particularly the long-short and long-short bias strategies within equities, which benefited by holding financials, including banks, as well as resources counters. The offshore component of the portfolio delivered the worst return in a weak global environment due to heightened risk. The total offshore exposure was approximately 12% over the quarter. Within the offshore, over 70% of it is invested in global fixed income assets, including bonds and cash in dollars and euros. The smaller component of the offshore is in equities, which fell the hardest in a poor and volatile environment impacted by geopolitics. Stock selection within the equity component detracted due to an underweight in energy and materials. The pie chart and tables show the diversified strategic asset allocation of AF Protector. A large allocation to bonds provides exposure to changes in interest rates, which is the primary underlying driver of the change in annuity prices. A high allocation to low-risk defensive assets such as local cash and local bonds spreads risk across various asset classes, investment styles, and asset managers, and also helps with capital protection. There is a moderate allocation to riskier growth assets, as growing returns is not the primary objective of the portfolio. Hedge funds provide protection for when equities underperform during times of heightened volatility or when expected returns from traditional asset classes are muted. Thank you for taking the time to listen to this podcast. We hope you found it informative. Please visit our website to access our latest insights, content, and media publications, or you can contact your consultant for more information. And thank you for your ongoing trust in Alexforbes.